the government has been shut down before. We've got a graph up here that shows sort of some of the range in the number of days. The big one was back in 1995, which had some real political consequences. But what are the chances right now?
I think it's 50-50. You know, the conventional wisdom is that they will go right to the wire, and it could go past the midnight deadline. It could go into early this morning. I know our Washington bureau is already got sleeping mats in the bureau. They're in for the long haul. But there's the potential for real miscalculation here that could make it a longer shutdown.
Well, and overnight it seemed like we had House Republicans sort of going right. They got a promise on defense and also on immigration. And the Senate Democrats going left. It seems like they're going away from each other, not toward each other.
There's tremendous pressure on Chuck Schumer not to give in on the DACA deal. And there are Republicans who have basically, Republican senators have thrown up their hands. Lindsey Graham says, I'm not going to vote for a short-term CR. We've got to stop running our government this way. So there is no clear path for 60 votes in the Senate at this point.
So, Gina, do the economic markets care about this at all?
No, not really.
Okay,
I mean, frankly,
yeah.
we've become desensitized to this issue, right? We experienced 2013, so we have a model for what happens when the government shuts down. And the reality for the equity market was we did see a spike in volatility, but it wasn't nearly as large as the spike in volatility in the bond market. Stocks sold off, but started selling off a few weeks before that. And ultimately, the sell-off was about 5% in the S&P 500. Now, if we're going to see this evolve as a risk for the equity market, it will first show up in bond markets. It'll show up as a yield rally, which results in some compression in the equity market, financial sector specifically.
Well, let's take a look at that real quick. If you come inside the Bloomberg, this is the 3-month bills versus the 10-year yield. And you can see what, Gina, you were just talking about, that spike that you saw back in 2013, but that was 3-month bills. But we have not seen that at all. Should we be?
You know, I think it depends on a lot of factors. I mean, right now, there's a decoupling of issues between the government shutdown and the debt ceiling, which is a little bit different than the past. And the debt ceiling discussion is a little bit more worrisome for the bond market, it seems, than a government shutdown. And the government shutdown right now is perceived as maybe having a short-term impact on economic growth that is fairly minimal. So I think it depends on how long it lasts. If it's 2 or 3 weeks, it's nothing. It's a blip on the radar screen. If it's 6 weeks, if it's 8 weeks, if this becomes a longer-term persistent issue, then I think it becomes a big problem.
Marty, you bunking overnight?
Yeah, I'm going to be up. You know, what's interesting is what Donald Trump is going to do. Is he's planning to go to Mar-a-Lago and usually to golf.
And have a big party scheduled tomorrow, a big gala celebrating his first-year anniversary. And the question is whether he can do it.
The optics,
that's right.
The optics of that during a government shutdown are rather amazing.